Hello, this is Cynthia Fick, and this is the April 18th stock market update. Well, I don't know about you, but pretty much everything I'm seeing and hearing and everybody you're talking to is super negative, very bearish. And they think that we're going to have a big crash in the stock market and that we're going to have a horrible recession. And so all kinds of things, big run of banks, there are all kinds of things circulating out there that are just very, very negative. And so that can create uncertainty. And during times of uncertainty, I'm just going to use today to talk about some things that we know for sure. And the first one is the Federal Reserve. The Federal Reserve has told us that they're going to get inflation under control, which to them means bringing it back to down around 2%, which we are nowhere close to. They also have very well communicated how they are going to go about bringing down inflation and slowing up the economy. They're going to continue to raise rates. So heard a Federal Reserve president today speaking, and he basically agreed with a 25 basis point increase in May. And then he thought that they should hold off and see what's going on in the economy, mostly because banks are at some point going to be tightening. They're not going to be lending with all this uncertainty going on. Most likely we will get that raise in May. And, actually the economy and the market have been very resilient. This Fed Reserve president didn't seem to think we were going to have a recession. He was thinking we're going to have that nice soft landing. So those are some things we know for sure. We're probably going to be getting another 25 basis point increase in May. And I believe that's already kind of baked into the stock market, meaning it's not going to respond negatively when that news comes out. So that's one thing we know for sure. The second thing we know for sure is that actually the stock market has been amazingly strong and resilient. That's the best time for the stock market when everybody is bearish. Everybody says run for the hills. It's actually not a bad time to consider at some point investing in the market, because everybody usually does the wrong thing at the wrong time. Let me share with you some screens that kind of support that. Here is the S&P 500, and I have told you that we had a nice run so far in 2023. To me, it seemed more like a big tsunami wave, very broad, very deep, a lot of stocks participating. And then we did our normal, what I thought healthy touchback. And of course, that got exaggerated when we heard about the Silicon Valley Bank. And we have bounced from there. We are almost at the old high that we reached in February. And again, amazing strength in the midst of all this uncertainty and what can be considered negative news. So that is the S&P 500 coming up to its all highs of 4,200. So that's what's happening there. Let's look at the NASDAQ 100. Well, it has done the very same thing. Big, strong beginning of 2023, did a touchback, exaggerated by the Silicon Valley Bank issue. And then it went charging ahead, broke out and above the old high. And here we sit. It has not broken that line significantly. So these, again, are very strong moves in the stock market, and we cannot ignore them. I will continue to wait and monitor. We did not get drawn into any of the head fake rallies that we had last year. And I'm going to let this rally confirm itself, because if it's a real bull market rally, it might have a way to go. And so that's what we're waiting for. That's what we're watching for. And the market sometimes does best when it's climbing a wall of worry. And we definitely have that today. So I will see you next Tuesday. Have a great week until then. Bye.